markets. Today's Fed rate day will potentially cut interest rates. Well, most likely cut interest rates. Question is, by how much? So that's what we're going to talk about. Before we start, though, as always, I need to stress that trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. As well, if you're in the chat, you're most welcome to watching this. You're most welcome to say hello. We have Tim here. Good morning to you, sir. Hope you're having a great day. If you guys want to join, say hello. You're most welcome to do that. You're also most welcome just to sort of ask questions or anything you may have. Okay, so let's begin, and we're going to take a look at the CME Fed Watch tool. So it's been updated recently. So it was better before, actually, because it would actually show you what the rates was right now. But it's quite straightforward. If you look here, the rate right now is between 225 and 250, and the likelihood of getting a 25 basis points rate cut is 76%. You still have about 24% of people anticipating, or the money really, because it's not people, but you can, I guess it's almost the same, betting for a 50 basis points rate cut. Now, Bullard, which I mentioned before, is one of the more dovish members, and he's been advocating for a 25 basis points cut. So if you have someone that is bearish, and tends to be rather bearish, and he's not really that interested to actually cut interest rates by more than 25 basis points, sorry, why would the market anticipate 25 here, or 50? And I think this has to do with more of the fact that people are, the same way as you have trends in Bitcoin, stock markets, and everything else, you have that in interest rates as well. So if you imagine that we don't have a 50 basis point cut, then a fifth of everyone trading the rates market is probably going to have a bit of a surprise. So that could potentially cause the Euro USD trading lower, and that sort of would be my main scenario here for that actually happening. Now, I know the ECB very shy, and put out this bold statement. They're going to cut rates, do QE, and have a symmetrical inflation target. And then obviously they backtrack on all of it, on most of it. And we'll see. If they cut next month, or next time around in September, I think it is, and they cut with just 10 basis points, then yeah, the ECB far more less dovish than anticipated. On the other hand, if they cut with 20 basis points or more, then that could be something. Or 20, and as well, what I think was interesting is that the new head of the ECB, Lagarde, she is normally much more dovish than the current head of the ECB. So it should probably at one point have much more action in the euro. We just need to be patient, really. Anyway, Fed rate day as well. If we close below 111.05, I think that's going to open up for decline to 110.15, and then lower. This is a big descending triangle, which break here opens up for move to the downside. So that's what I would focus on. You just need to understand it's going to be very volatile. I'm probably just going to be on the sideline just because I don't want to be caught up in this mess. I am holding one position right now, but it's not any dollar position, and hopefully it will be rather immune to the volatility. You never know, but less volatile, I guess, than something like the euro. So you need to be careful. It's probably going to be perfectly fine to actually short sell here. However, you just need to understand that it can dip and then goes upwards, so you need to bear that in mind. GBP, so we talked about selling, right? We talked about selling up here, and then we talked about selling here, and so I hope you guys made some good money on that. Not easy to trade, but I hope you made some money on the back of that, because the market then tumbled, which again makes perfect sense. Even people that I know that voted for Brexit, they've been selling, and they've been selling for a long time. And we're talking about people that have been in the market for a long period of time, and they know that there's going to be difficulties, and then maybe it's going to be better. I'm not really sure. I don't think they really care. I don't think they're gonna be around too long to find out. But no, that's a that's a joke. Then this gentleman is old, but not that old. But you know, he's probably gonna retire in the next 5 to 10 years. So anyway, what I'm looking at here is just the market that is afraid of what's gonna happen, and rightfully so. And then afterwards, we'll see what happens. If they can strike some good deals, I really hope so. At least it looks like they're gonna cut taxes, right? So if you're making money, get ready to make more money because you keep more of your profits. What can we say here? If the market goes up here, I still think it's gonna be on people's mind that we have Brexit. So on Twitter, a gentleman wrote to me yesterday and said, "Oh, you know, very tempted to buy." Yeah, you could always buy, but you know, the market could be here at the pattern target, or it could be upwards. So yeah, maybe you'll scalp and make some money on it, and because I think it will probably go upwards. It probably needs to go up with about 100 pip or so, and then probably trade lower. And it's not going to go in a straight line. So I don't disagree with that, but it's not something you buy and keep for a long period of time. To do that, you need to probably have stops or look at least for a break above 125.23 as a minimum. So I'm bearish from 123, 50, 123, sorry, and I'm not gonna be looking to sell there immediately. Rather, I'm just gonna see what happens when we go upwards. So it's a little tip: focus on GBP, USD, GBP Aussie dollars, GBP yen. If you can look at a few sets of GBP pairs and they all sort of start to reach levels where they're interested to be shorted, then that's when it's time to get involved. That helps quite a lot. Dollar yen. This is also going to be interesting today. It's interesting because the price is trading sideways between these two levels. So there's about a 60 pip range. And if we take out the high on the Fed being less dovish, then we could potentially see this trading upwards. Not super exciting situation, but break to the upside could open up for a push towards the May 30th high. And then you have the pattern target at 110.97. Let me see here. Crude oil prices. So crude oil, within this little rectangle here, managed to swing to the upside. And it's now, I guess, moving down a little bit. It has a bit of a bullish bias. Might go down to breakup point, but then I think it's going to go maybe up to 59, maybe 60. But because this market overall is just trading sideways and is capped by this massive triangle, I am very, very careful to have any strong view here. And I would be very, very careful to do anything here. There are a few occasions when you have some decent setups. I mean, I believe every market has a very good setup every year or so. Every year, maybe one or two. But it's been some time. Like in the beginning of this year, we said probably going to bottom out here and go higher because we have an inverse and shoulders, and that worked out fine. And I remember being bearish here as well on the short term, and that also worked out fine. And then I think here as well, the sales section here also worked out fine. But then on the way here, I mean, it wasn't easy here, right? Because we got chopped up a bit. And I think we got chopped up here, I think it was. I don't remember exactly. Problem though is that when things start to narrow down like that, it gets more and more choppy. And whatever level you pinpoint here, there's fewer and fewer people watching those levels. And people are just waiting for the big breaks, which is a break to 50, 58, or 60, 94. Gold prices. All right, let's take a look at this one now. So it's still bullish, you know, without a doubt. Definitely slid below support here at the 14, 14, as you might remember. I was long myself, and I actually got stopped out at that point. Looking at this today, you can see how the market is back up at it again. And if we take out 1433.88, which is the high here from the ECB rate meeting next week, we might go upwards. As linked to on regards to the Fed, if there's like the less dovish, we may actually go down again. So you need to be very, very careful. My general view here is, okay, you can scalp and do things ahead of the meeting, but then around the meeting, so around 7 p.m. London time, probably a good idea not to have direct exposure to. Um, it's not good to have direct exposure to the dollar, I would say. And just wait and see what happens. Unless, of course, you have a very nice entry and you sort of don't mind and you sort of happy to play with that risk. So break here would end at these series of higher lows, and you will have an alignment of the short-term trend, which is this one here, with the big picture. And I still think we're gonna go upwards. We still have that massive triangle pattern, had that break, and then we're going upwards. That's the triangle pattern target. Then you have the flag pattern target, which is here at 1545, and then you have the inverse head and shoulders pattern, which is up here. And I think this is the ascending triangle pattern, which is at 1,600. So I still think we're gonna go upwards, but it's a bit of a choppy market. You need to, I guess, not be buy and hold almost a little bit. I mean, the big levels to really hurt gold prices right now are down here at 1381. If we trade below that level, probably at that point, we can rule out this breakout in gold prices. Here's the S&P 500, and the S&P 500. A few days ago, I said, look to buy here, and it moved upwards, but is stuck in between 29.51 and 30.26, and this is almost like a bit of a range right now. So obviously, if you're still long and you say, okay, I want to gamble with that, I don't care too much, you can gamble with that profit you have there. But I would say book off and then wait maybe for a break to the upside. As for the Fed rate meeting, as you've probably seen yourself, any comments of, higher rate cuts and stuff like that is getting everybody super excited about the stock markets. They're really like addictive to it right now. So any sort of indication that they're gonna cut more, the market loves that. So what if they don't cut by 50 basis points? Well, you can probably see interest rates go up a tiny bit. The stock market is probably going to be down here somewhere. So you need to be very, very careful here ahead of that rate meeting. Now, looking beyond this event, right? So what needs to happen to sort of cause less rate increases or less rate cuts would be if the US economic data does good. So you should have the ISM indicator coming out, I think, this week. And then you also have the non-farm payrolls. So if these numbers start to move upwards again, then clearly, you're probably going to have less rate cuts, and then the dollar could probably gain. However, if the data deteriorates, then the dollar is probably going to lose. And at least for a short period of time, it's going to be a situation where people actually buy stocks, but then eventually they're going to say, oh, wow, look at the economy. We're not creating any jobs anymore, or things are really bad. Then stock markets would peak, but we're not there yet. So beyond the noise of this single individual Fed rate meeting and the NFPs, I'm gonna push this down now, by the way. As long as you trade above 29.59, then you're dealing with an uptrend. And not only are you dealing with an uptrend, you're dealing with what looks like a massive inverse head and shoulders, or like a cup and handle if you want to do that interpretation. So if you do like a cup and handle, then this would be the base of the cup, and this would be the handle. So the difference between here and here, you draw a trend line, and difference between these two levels gives you the target. Now anyone that knows the head and shoulders knows it's the same target because it cuts through the same level more or less. So from that perspective, I ignore the spike section here. We still have that, which is a very bullish pattern. So again, above that level I just mentioned, which is the 29.59 level, then we can ignore NFPs, we can ignore all of that. As long as you're above this level, I will remain bullish. In the short term though, we can easily come very close to that level. DAX unfortunately turned lower, so the idea was to buy here, and the market went up for a tiny bit and then it plummeted. There's nothing to do about it. European stock markets unfortunately been slightly weaker. There's nothing to do about it. With the risks comes the reward. and it was looking rather good, but now it's not, and the market traded below the low. And I think what's happening here is that it needs a steeper correction for now, because right now we still remain in an uptrend here, because we're just having these sort of corrective moves, and we're just pushing deeper. So if I put a fib on this from the very low to the very high, you can see we corrected to the 50% level, and we may go a little bit lower to maybe 12,000, in worst case 11,836. I think that would be a good spot to resume bullish view from here, looking for that to go upwards. If you don't want to be part of that and you don't looking to grab that dip, which I understand, then you're looking for the end of these highs. So right now you need to have as a minimum a break to 12,470. Until that happens, we'll be in that downtrend, and it's nothing wrong. Sometimes you can actually sort of go like that, and then when it ends you turn bullish, much like gold, for example. Gold is about to end its downtrend. Okay, let's see what you guys say, if you guys have any questions. So we have Marvin here. Good morning to you, sir. We have Nikos Paris as well, and hi. So we are having some issues with the website today. It was running a bit slowly, so I decided just to do the webinar here on YouTube. Looks like it's back up again. If you do have any questions, let me know. Look, if you see this, it's just to register. It's nothing more than that. Yesterday we had issues as well with the IT here. Well, actually, not the IT. I just couldn't do the actual. We're having issues with the IT today. Yesterday I just had some other things that came in between, but I did upload a few analysis points like dollar yen. I also did euro USD, and I did GBP USD. So you just need to register to sign in and read that, and then you can read all of the content. You can also download the quarterly report. You can also download our previews that we do for shares. The next company we're going to focus on is going to be Tesla later. Sorry, it's going to be Alibaba actually later this and well in August, really. I think August 22nd. Okay, so we don't have any questions, so I think we're going to wrap things up. You're most welcome just to like the video, and if you have any questions or anything like that, just let me know. You can reach out to me, and you can also reach out to me via Twitter at ATFX00. And so if you have any questions, you're most welcome to email at alejandro.zambrano@atfx.com. I'm going to gonna be available here. If you have any questions about the premium educational courses or anything like that, just reach out to me. Have a great day, guys. Thanks so much for watching, and I'll see you guys tomorrow, same time here at the ATFX YouTube channel and on investingcube.com. Thank you.